Welcome to Illuminati Silver. We tell you the truth about silver. Today is Friday the 16th of November 2018 and we're going to talk about the release of the Refinitiv Interim Silver Market Review. At the annual Silver Industry Dinner hosted by the Silver Institute, Johan Weber, the lead analyst in the GFMS team at Refinitiv, presented the GFMS Silver Institute Interim Silver Market Review, which includes provisional supply and demand forecasts for 2018. We are going here to review this report, which was embargoed until 7 p.m. EST time yesterday, and then discuss some of its implications. So if you actually look at the screen, you will see that basically the report headlines that silver industrial demand remains strong. Surplus, though, is expected for 2018. Let's look at perhaps the most relevant factors. Point 1. The silver market is expected to experience a physical surplus of 35.3 million ounces, which is substantially higher than the previous year. Physical surplus is going to experience an increase on the previous year. Secondly, the silver price has averaged $15.89 an ounce so far as of the 10th of November, which is 7% lower compared to an average of $17.05 last year. And it is predicting that by the end of the year, the whole year average would be $15.73 an ounce, which is lower than the current estimate of $15.89, which clearly indicates that they are expecting prices to continue to fall. Point 3. Following a drop of 1.5% in 2017, total silver supply is forecast to marginally rise again by 0.3% to 998.4 million ounces. The increase is solely driven by mine supply returning to growth this year, rising 1.6% following declines in output recorded in the previous 2 years. So mine supply is going to increase. And this is part of the reason for the envisaged physical surplus mentioned in point 1 above. Because then we have to look at this. Global physical demand is expected to contract by 3% to 963 million ounces this year, a third consecutive decline. Now stackers, please note this. Forget all the nonsense the pumpers are telling you about physical demand is rapidly increasing and everyone's buying bars and coins, because the Institute is highlighting bar and coin demand will be the main driver behind the fall, contracting another 12.2% to 124.8 million ounces in 2018. And this is an interesting part here, actually. New physical demand, coin demand, has remained under pressure this year, particularly in the United States during the first half of the year, as the investors relied on the secondary market with older dated coins for their investment needs. Now, the report goes on to mention demand for jewellery and silverware is forecast to fall by 0.6% to 252.9 million ounces. And this is the key one for us, the use of silver in a wide range of industrial applications, accounting for 60% of total silver demand in 2018, we foresee on balance a modest decline this year of 1.8%, reaching 585.4 million ounces. Now let's forget the rest of it because it goes into detail on how this is made up. The bottom line is that the Institute is predicting an increase in total silver supply by 0.3%, a decrease in physical demand by 3%, resulting in a physical surplus of 35 million ounces. How many of you have been listening to the pumpers channels who are basically telling you, with such a decline in mine supply and demand going through the roof, the price of silver will rise parabolically? How many have told you that? How many have stated to you that mines will have to close if prices fall any further? When the reality is their actual supply is increasing. Why? Because their all-in sustaining costs have fallen so dramatically. Only a short while ago, the pure silver mines had all-in sustaining costs in excess of $20 an ounce. Some as high as $25, for crying out loud. As soon as the sharp reality of the market kicked in, all of a sudden, the pure silver mines, which represent about 30% of the market, their all-in sustaining costs have fallen below 15, and in many cases rest at or around $12 an ounce. Now, that might infer to the average viewer and investor, so if silver falls below $12, they'll go out of business. No, they'll cut back on their research and development. Yes, that will happen. So their broad costs for getting research and development then fall at or around 10%. We may be out by 1% here because our latest data doesn't give us the precise figures, but they fall at or around that sort of figure. So they can actually cope and continue to mine even at $10 an ounce. But what's more fundamentally important is that 70% of silver is produced by non-pure silver mines. In other words, silver is produced as a secondary product. And there, the all-in sustaining costs start well below $8 an ounce. And the actual true extraction costs may be as low as $5 an ounce. So theoretically, silver could actually fall to those levels without mine supply being hugely, hugely affected. Now, we're not saying for one moment, because we genuinely do not believe that we're going to see silver at $5 an ounce or $8 an ounce. Personally, our view is $12 an ounce. It's now reaching its absolute potential bottom. Though there are others who totally disagree with us and are talking about $10 silver, and we have to admit that is indeed a possibility. But at the present moment in time, our analysis is suggesting that that is highly unlikely. But certainly $13.50 is the sort of predictive bottom that we have for the very near future. But we fully accept prices could fall below that. So we can see from this report, based on this year's actual data so far, there is nothing to suggest that silver should be heading towards $20 an ounce, or $18 an ounce, or $25 an ounce, or $100 an ounce, or Bix Weir's $100,000 an ounce. We have to get real here. If you are placing significant sums of your income and surplus monies into this marketplace, we have to get real. We have to seriously look at these figures and say, what is the possibility? Now, do not misunderstand us. Of course, if the dollar collapsed tomorrow, then the value of silver, and in fact all commodities priced in dollars, will rise in value because the dollar is worth less. Does not necessarily mean you will buy more with it, because prices will rise as a consequence of that devaluation of the dollar. And this is a point that is so difficult to convey, because for far too long, the pumpers have had the monopoly on the communications media, particularly YouTube, and, to be blunt, Google ads and so forth, are now showing, you type in gold and silver and you see all the precious metal mining companies quoted there. All of them pumping higher prices, higher prices, higher prices. Ask yourself, why are they pumping higher prices? We don't condemn them for it in so much that we understand why they do it. They do it because they're in business to sell gold and silver. And they know full well that unless you really believe those prices are going to go to the moon, you're not going to buy any. So they have to create that belief system that not only is that going to happen, and we do believe it will, but it has to happen now. It could be tomorrow, it could be next week, it could actually be as early as next month. And we hear the adage, and whenever we hear this phrase, we know they're a pumper. Better a year early than a day late. As soon as we hear that. The problem is that these pumpers have been doing it for so long, it's not a year early. It's 7 years early or 8 years early. And some people have lost 60 to 70% of their investment. Now, of course, if, as we put out on our videos, you intend holding for 20, 30 or 40 years, then that does not matter. That's fine. You can lose 60% because we believe in that time frame it will come back and more. But if you're thinking of investing here for 5 years or 3 years or 1 year, and God forbid, borrowing money in order to invest because you believe these pumpers are right, it's going to happen tomorrow, unfortunately, you will be very, very disappointed and frankly, very broke as a result. So our overall message of this is not, do not invest in silver, the prices are going to collapse. It is, yes, by all means take the opportunity that is being presented to you, but acquire it in the knowledge that prices will go up eventually, but it may not happen as considerably or as quickly as you believe or hope that it may occur. Take a long-term view, purchase gradually, and then you should reap the rewards from that investment. Now, going briefly back to the chart again, you can see here, according to the Institute's report, we have mine production forecast, this is their forecast now, rising to 865 million ounces compared to 852 million last year. Which means if you then add other supply, you'll have 998 million ounces compared to 995 million last year. Demand, let's go straight to the bottom because we've mentioned the component parts. Demand, 963 million compared to 992 last year. And look at the year before, 1033. Look at the year before, 1155. So for the past 3 years, demand has fallen. And then you have the physical surplus deficit figures, and there will be a surplus this year of 35 million ounces. And again, look at the average prices. We can go as far back as 2011. Average price $35. 2012, $31. 2013, $23. 2014, $19. A great low admittedly in 2015 at $15.68. And that spurred on some growth, which is why the investment figures then, the physical demand figures started then to go up, because of course the price was so low. So we were at 1714. 1705 last year. And we're back down again now to 1573 forecast. Similar price to 2015, but it looks like the actual physical demand has petered out. People are becoming tired of investing in silver. Now, contrarians will view that as a positive element. We've all heard the time to buy is when there's blood in the streets. We're not sure there is blood in the streets as yet. But what we are sure of is that since we've existed at Illuminati Silver, you have seen prices more or less remain stable from when we started and fell from when everyone thought the prices were going to go parabolic. We have been collecting silver ourselves for the majority of our lives. We have done so on a gradual, slow basis, quite frankly, and choosing those choice pieces that we find desirable, and in some cases have proven to be a good long-term investment. That said, there will be a day when silver will have its day. But the caution that we portray and convey to you, the caution, is industrial demand is more or less fixed. You're looking more or less at 60% and possibly slightly lower. Bear that in mind. So the only thing that is going to push silver higher is going to be the speculative demand, the investor demand. And that is investment monies ploughing into this space because they believe they will either A, have a greater return than what is currently on offer elsewhere, such as equities and bonds, or B, they are frightened that something drastic is going to happen economically, and they look at silver as a safe haven. We certainly hope that this message conveys to you the fact that caution is important. You are at a level where prices are relatively low, to be fair. But there is no need to panic. And if prices fall further, by all means look at it as an opportunity, but a long-term opportunity, as opposed to a short-term profit maximization goal. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and pressed the bell sign so that you are notified of any future videos. Kindly visit our new website at illuminatisilver.com, and if you haven't already done so, please subscribe as either a free or paid member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management, and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice, and merely represent the personal views of its owners.